If you think you missed Nvidia, you're not alone. Most investors do the same thing every cycle. They wait, they hesitate, they tell themselves they'll buy the dip and then miss it when it comes. Then the stock recovers, breaks out again, and they convince themselves it's too expensive. Here's the truth. Almost nobody actually made money on Nvidia's run, and now they're about to miss it twice. Not because they're dumb, but because they don't understand how dominant companies scale. They see a $4 trillion market cap and think, this has to be the top, but that's not how wealth is made. You don't bet on where the price was, you bet on what the business is becoming. And Nvidia is not a chip maker anymore. It's a software company disguised as a hardware company. It's the infrastructure layer for AI, and Wall Street still doesn't know how to price that. This is where most people make the mistake. They look at the charts, the headlines, the hype. They don't study the margin structure, the cash flows, or the software flywheel that's just getting started. So if you're holding Nvidia, thinking about adding, or wondering if it's too late, pay attention, because in the next 10 minutes or so, I'm going to walk you through what almost nobody is talking about. Margins, software, supply chain dominance, $6.7 trillion in capital expenditure spend, and the one chart that actually matters. Let's get into it. Let me give you a stat that makes no sense until you understand what this business really is. Nvidia just pulled in $80 billion in net income. That's not revenue, that's cash, after expenses, in the bank. Most Fortune 500s won't make that in a decade. And here's what should make you furious. Wall Street is still pricing this thing like it's risky. We've got a company growing revenue 86% year over year with a 70% gross margin and 58% operating margin. That's not good, that's elite. Those are software margins coming from a company that sells hardware. The only way that's possible is if something bigger is happening under the surface, and it is. The PE ratio dropped from 54 to a forward 40. Let me translate that. The business got better and the stock got cheaper. That's not normal. That's the market being wrong in real time. Cash is up 70%, debt is down, margins are expanding. Free cash flow is pouring in, and Wall Street is still asking, is it too expensive? Let me ask you this. If a business increases profits, increases efficiency, piles up cash, and becomes dominant in the most important tech cycle of our lifetime, how is that overpriced? It's not. It's misunderstood. Nvidia is scaling so fast, the market can't keep up. And that disconnect, that's the opportunity. But most people are going to miss it because they still think like traders instead of owners. This company isn't riding a trend. It's building the damn road the trend runs on. And the numbers don't lie. Most people are scared to buy high. I get it. But you know what's scarier? Watching this thing run another 200% while you're still waiting for a pullback that never comes. This is not a guess. This is what execution looks like at scale. Everyone still thinks Nvidia wins because it makes the best chips. That's not true. That's just what the headlines say. You don't just replace CUDA. You'd have to rebuild everything. The tooling, the workflows, the developer base, the models, the infrastructure. That's not a migration. That's a full-blown extinction event. No one's doing it. And that's why Nvidia is untouchable. Not because their chips are fast, but because their code is everywhere. Because the switching cost is fatal. People say AMD or Intel might catch up on hardware. Doesn't matter. That's not the game Nvidia is playing. Hardware sells once. Software cashes checks every quarter. CUDA turns every chip into a subscription machine. It's why the margins look fake. 70% gross, 58% operating. It's not because they're efficient, it's because they're embedded and they own the whole stack. Listen up, because here's the reality. The world already chose. Developers chose CUDA. Enterprises chose CUDA. Governments, defense, healthcare, finance, all chose CUDA. The choice is irreversible. So when people say Nvidia is just a chip maker, you already know they haven't done the work. Nvidia isn't a hardware company. It's a software monopoly hiding inside one. And the punchline is this. Every time Nvidia sells a chip, they don't just make money once. They get paid over and over again, for years. That's not a chip sale, that's a tax. Once the company starts taxing the future, you either buy it or get buried by it. So here's what most people don't understand. Nvidia doesn't just have a lead in AI hardware. It locked up the entire supply chain before the race even started. TSMC, the only foundry capable of manufacturing Nvidia's most advanced chips, has already committed 70% of its advanced chip packaging capacity to Nvidia. Not to AMD, not to Intel, Nvidia. That's not normal, that's not even competition, that's checkmate. So while everyone else is talking about maybe catching up, Nvidia already secured the factory, booked the production, and locked in the delivery window. Competitors aren't trying to out-innovate, they're trying to get in line. And here's what makes it worse for them. Nvidia has $43 billion in net cash. AMD doesn't even have 10% of that. So while competitors are budgeting, Nvidia is overpaying to move faster. They're spending ahead of demand and building moats 2 years out. That's how you stay number one. You buy time and eliminate options. Now layer this on top. Google, Amazon, Meta, they're all ramping AI infrastructure. McKinsey projects $6.7 trillion will be spent on data center infrastructure by 2030. Guess who's the first call for almost every one of those orders? Hint, it's the one with the chips, the software, and the factory line already locked. People keep asking, can Nvidia maintain its dominance? That's the wrong question. The real question is, who even has permission to challenge them? Because when you control the inputs, the pricing, the production, and the platform, you don't have competition. You have customers pretending to be competitors. That's not a lead, that's a monopoly in motion. Everyone keeps looking at Nvidia's past gains and asking, how much more can it really grow? Wrong question. The real question is, how big is the wave it's sitting on? Let me show you. McKinsey projects $6.7 trillion will be spent globally on data centers by 2030. Not million, not billion, trillion with a T. And Nvidia already owns 80% of the AI chip market that powers those data centers. Now let's do the math. Even if Nvidia's market share drops to 60%, we're still looking at $600 billion in projected revenue just from AI-focused data centers. That's a 4x jump from today. If they maintain 80% share, it's closer to $800 billion. That's a 5x. So when people say the stock's already run, what they're really saying is, I don't understand the scale of what's coming. Because this isn't just about GPU sales. This is about powering the infrastructure layer of artificial intelligence, the single largest technological shift since the internet. Every model, every inference, every training cycle, it all runs through Nvidia hardware and CUDA software inside a data center that's already being built. And 88% of Nvidia's current revenue is already coming from data centers. That's not a pivot, that's full alignment. The world is throwing money at AI infrastructure, and Nvidia is the only company positioned to catch it at scale. And while analysts are forecasting a slowdown in revenue growth, they're ignoring the fact that capital expenditures in cloud, enterprise, and defense is ramping faster than they've ever seen. This isn't a company selling chips. This is a toll booth on a $6.7 trillion superhighway. You want to train a model? Pay Nvidia. You want to deploy AI at scale? Pay Nvidia. You want to build a future? Pay Nvidia. They're not optional anymore. They're infrastructure. And the only people who don't see it are still looking at the stock chart instead of the blueprint. When a product gets banned by the US government and still sells at a premium on the black market, that's not demand, that's obsession. Nvidia's chips, the H100s, A100s, and now B200s are being smuggled into China at scale. Over $1 billion worth in just 3 months. That's not a rumor, that's a confirmed supply chain underground built around one company's product. You want to know what's crazier? They're not just smuggling them, they're repairing them, fixing them, recirculating them like black market Ferrari parts. Some repair networks in Shenzhen are processing 500 chips a month. Rooms built to simulate full data center conditions just to test illegally imported hardware, and customers willing to pay 6 figures per rack, no warranty, no support, no questions asked. Why? Because when performance matters, Nvidia is still the only name on the list. So the US banned exports. China shrugged and bought them anyway. Not the watered-down H20s Nvidia made to comply with restrictions. No, they want the real thing, the ones that train models faster, infer smarter, work better. The best part? Nvidia isn't involved. They're not shipping these, they're not servicing them, but the world still can't stop buying. Let me make this clear. When a product gets smuggled, serviced, and sold without a supply chain, that's not normal. That's not commodity demand. That's dominance so strong it survives without permission. So for anyone saying Nvidia's run is done, ask yourself this. Have you ever seen a $1 trillion company with black market pricing? Apple doesn't have this. ASML doesn't have this. Not even defense contractors have this. Nvidia's not selling chips anymore. It's selling necessity. And you don't compete with necessity. You depend on it. So is Nvidia a good long-term investment? Let's kill the debate. You want the bull case? Fine. You want the bear case? Let's go. But when we're done, I'm giving you the bottom line. The bull case, revenue growth 87% year over year. Operating margin 58%. Cash 50 billion and rising. Software moat locked in. CUDA owns the developer ecosystem. Hardware dominance 80% AI chip market share. Supply chain 70% of TSMC's advanced capacity already locked. Future upside. McKinsey projects $6.7 trillion in data center spend by 2030. Nvidia is the default toll booth. Even if they drop to 60% market share, they still land $600 billion in annual revenue. That's 4x from today, and Wall Street's pricing it like growth is slowing. And now the bear case. Valuation. It's rich. PE is still about 40 forward. China risk. Ongoing black market smuggling could trigger regulation. Capital expenditure cycle slows down. Demand for GPUs could soften if AI hype fades. Competition. AMD's catching up on hardware, and Meta and Google are exploring custom chips. But let's stop pretending these are equal. The bear case is mostly narrative. The bull case is math. So yes, AMD can build a chip. They can't replicate CUDA. They don't have $43 billion in cash. They're not locked into every major cloud provider's roadmap. Nvidia is playing 3 moves ahead while competitors are still fighting for shelf space. The bottom line is this. Most companies don't even earn the right to have this conversation. Nvidia does, and it's executing better today than it was before the 10x run. This isn't about can it go higher. This is about can anyone stop it. And right now, the answer is no. Not Apple, not ASML, not defense contractors, nobody. This company is more dominant today than it was 5 years ago, and the world still doesn't understand how big it's about to get. Let me make this simple. Nvidia is my second largest holding. I've got $1.37 million in this stock. I'm overweight, I'm exposed, and I'm not trimming. Why? Because the business is getting stronger every quarter. Revenue is up, margins are up, cash is up, market share is locked in, supply chain is sealed, software dominance is expanding. Show me the weak link. Now, here's the real question. Is the market confirming the thesis? Yes. Price is trending up, volume is rising, the breakout wasn't hype, it was built on earnings, not narrative. That matters because I don't chase charts, I follow execution, and this business is executing in a straight line while the stock price is still catching up. Could it pull back? Of course. Stocks don't move in straight lines, but strength plus structure plus story, that's not a bet, that's a signal. Let me also say this. I'm not owning this stock because I think it'll double in a month. I'm owning it because this is a 5-year trend that just got started. The volatility is the price of admission. You don't get generational upside with short-term comfort. You want to play scared? Go buy a bond. But if you want to build real wealth, you have to get good at holding when it's hard and buying when it's uncomfortable. My bullish thesis is intact. The numbers are accelerating, and every data center, model, and cloud infrastructure build is reinforcing this position. I'm not guessing. I'm following the money. Nvidia is where the money is going, again and again and again. So here's my stance. I'm holding. I may even add on a dip, and I'm watching price and fundamentals move in sync. This is not hype. This is not a prediction. This is conviction backed by results. So let me ask you something. Who else is breaking down Nvidia's real margin story, the software moat, the black market demand, and the $6.7 trillion AI infrastructure wave, while actually showing you how to build a position in real time? Who else gives you both the bull and bear case, shows you the thesis, and walks you through how to execute with conviction? Nobody. That's why Nvidia is my second largest holding. I've got over 1.37 million in this name, and I'm still buying, and it's not just me. Richard just closed out the week with over $2,000 in profits and nearly 10% return, using leaps on Nvidia, put credit spreads on Google, and Amara exit before the pullback. Wreaks Havoc pulled in $753 off a single OKTA call. Jack cleared $1,492 net in one trade on Robinhood and said it best. Hood's printing cash and it's still a buy. This isn't hype, this is execution. Inside my Patreon, you get real-time trade alerts, full breakdowns, entries, exits, and the why behind every move. Daily market analysis, no fluff, just what matters. The exact momentum strategy I use to scale seven-figure positions with discipline. It's $30 a month. People blow that on DoorDash without thinking. This is one thing that could actually pay you back. You want to know if this works? That's why my accounts are up over $1.83 million this year with a 52.71% return year to date, and it's only July. This isn't theory. This is what consistent real-world execution looks like. Try it. If it doesn't sharpen your strategy, grow your account, and give you more confidence in every trade, cancel anytime. No pitch, no pressure. But if you've been watching this channel, nodding along and telling yourself I should join, then it's time. Stop watching, start building, because the truth is simple. You can scroll or you can scale, but either way, don't say you weren't told.